Just wait for a few of you to come into the live stream. We've just had some news about the good old PPI index, manufacturing data. It's a very interesting day to say the least. So what am I talking about today? Well, I'm on my travels, as you can tell. But more importantly, why am I talking about the bull run won't last? What bull run? In relation to what? What, crypto? Stock market? I've got a bit of a theory. I actually believe that there won't be a bull run until the Fed achieves the 2% target on inflation. What's good, Zigzag? And the reason for that, ladies and gentlemen, is this. We are so close to the 2% target that the Federal Reserve is seeking. Now, let me draw your attention to a couple of things right now. You've got Donald Trump making these big, historic deals with Saudi Arabia. $1.2 trillion in total. Absolutely massive. You got OpenAI in there. You got Elon Musk. You've got Jensen from NVIDIA. These are all the big boy companies that are getting involved in that investment. So anyone on a bean would understand that you want to get involved and invested in those stocks. But the problem that we've got is there's this sort of disconnect right now with the marketplace. Now, over the last couple of days, I've been talking about how tech could effectively lead the bull market, which is true. But the problem is there's one asset class that is not giving us the real truth as to where investors' heads are at right now. And that's the bond market. Everyone can see that the bonds right now have taken an absolute smack to the downside, and they're not moving up. The yields are climbing up. And as long as the yields keep on going up, the sustainability of any bull market will be challenged. Now, Goldman Sachs has said before that, of course, there are rallies during bear markets. So that's what you've got to take into consideration. Now, where does that put cryptocurrency? Well, we have seen a little bit of a disconnect with the stock market and crypto. But when you think about it, the stock market itself has actually, and Bitcoin and crypto overall, they're not doing anything. Bitcoin's so close to its all-time high, yet it's not following through. And I do believe that investors in crypto are waiting to see what's going to happen in the stock market. NASDAQ is not too far away from its all-time high, okay? And what you've got to take into consideration when you do approach investing in these sort of environments, like I said before, it's macro-driven. Bitcoin dominance goes up. There we go. So, yeah, sorry about that, ladies and gentlemen. Anyways, so this is the story that we've got. Like I said, in my opinion, once the Fed hits 2% inflation target, that's when the bond market will start to go up. That's when everyone's expectations of the future are going to look optimistic. But right now, in my opinion, the bull market won't last too long. Now, I did say yesterday that we've got volume coming in suggesting that there is a bull market, okay? But the macros aren't aligning because the yields are still high. That means investors are still seeking a greater return for picking up US debt, okay? So that's something you've got to take into consideration. PPI data that's come out. Bro, you're always wrong. Okay, never mind. Listen, bro, it's not about being right. It's not about being wrong. If price goes up and if I say price goes up, but then it goes down and then it goes up, who's right? Doesn't matter, you know? When you get comments like that, anyways, never mind, minor. So PPI data that's just come out. It's showing a contraction in the PPI, which is effectively the cost of goods and services. So that means prices. It's come down. That's good news. Why? Because then that leads us into understanding that there's going to be more of a chance of inflation coming down in the next reading, right? Manufacturing sector has come down, minus 9.2%. Sorry, a reading of minus 9.2, right? So there's contraction in the economy. So there's another reason as to why the Fed needs to cut the interest rates. But you know what? From now up until the point when they do actually decide to cut the rates, unless we hit 2% on inflation, the Fed's not going to do anything. Trump wants to have a conversation with Powell. I don't think he's going to have that. And even if he does have that, it's not going to stop the Federal Reserve from waiting until it achieves its target. They do run the risk of forcing the markets, or should I say, run the risk of forcing the economy into a recession. There is speculation on the street that is saying that investors are expecting a 57% correction in the stock market. That's what they're saying. 57% correction. That is a lot. That is a huge thing. Do you have any questions, ladies and gentlemen? Let me just go back to something else. As it stands right now, the only problem that you've all got when it comes to the idea of the stock market going up is the rates that are being offered on the Japanese yen and the euro. I just saw this morning. Convert your dollars into euros, you're effectively getting around 48%. 48%. I believe it's on a 4-day, 0 days till expiry. Okay? Days till expiry 4. Okay? So that means if you went to exchange dollars and euros with this specific asset class by the principle of implied rate differentials, it will say that you'll pick up 48%. That's on the euro. What about the yen? Nearly 100%. That is just absolutely wild. What's that telling you? Well, right now the euro's pumping up because the news on the dollar is bad. But in the longer term, it's good news for the chances of interest rates being cut, because we're seeing prices of goods and services coming lower, the manufacturing sector's contracting, and the Fed doesn't want the US economy to contract. In other news, the UK economy has expanded, you know, by 0.7%. So they never expected that. Now, how do we go into the sessions? Like in terms of New York and what have you, the only thing you guys all need to be paying attention to is what are the yields doing? If the yields are still trading high and the bond market is not doing anything, anything that is happening on the NASDAQ and the S&P will just be little rallies. So you've got to be very, very cautious about taking risk. If you've got risk on right now, hold it. And if you start to see it's going in the opposite direction, start to scale back, leave some runners on just in case we hear about any news that could actually send prices higher. But you're riding macro-driven environments. But like I said, we're not going to get the bull market that we truly want, that everybody's waiting for, until the Fed achieves 2%. Why? Because if they're not buying US debt, which is deemed as a low risk, why on earth are they going to go anywhere else? You know? Where's my brother at? Oh, where you at, brother? You're the biggest flip-flopper in the industry. Yeah, Jeffrey, I mean, if you want moon boy status, go to those kind of guys. I'm not going to talk. I'm going to tell you straight what it is, okay? Look, pal, appropriate to reconsider average inflation targeting. Do you understand what that means if they actually come away from the idea of readjusting their targets on inflation? That undermines the US debt. It does. Investors will then think, hold on a second, you're readjusting the target. Just goes to show that you've got your policies wrong. That is horrible if they were to readjust their targets. You know? Horrible. They do not want to readjust their targets at all. Because if they do, why? Okay, let me explain something. Put it like this. If you want to go and borrow money with a bank, and the bank says to you, this is the rate of interest that you're going to pay on this loan. You say, thank you very much. Then they call you up and they say to you, sorry, we've changed our minds. We want more. And you're like, well, why do you want more? It says in my contract that I'm going to pay a fixed amount, right? They're like, no, we're changing it. We want more. They have no reason to charge you more. Unless there's been a big interest rate increase, naturally you accept that, right? But if they have no reason to increase it and they're coming to you and asking for more, what's that telling you? Well, is the bank got liquidity issues? Why are they seeking more money from me? So then you start to get your back up a little bit and think, hold on a second, I don't want to do business with this bank. It's given me an interest rate, it's fixed it, but now it wants more. Doesn't make sense. This is the same story with the Fed, you know? If the Federal Reserve changes its initial target on inflation, investors are naturally going to say, well, you know what? You clearly got it wrong. We're going to demand more of a rate of return to pick up your bonds because you keep moving the goalpost. What does that lead to? Yields move up, bonds go down. Investors want a higher rate of return to absorb the fact that you're wrong about your inflation rate. You're wrong about your interest rate path. That's the problem we've got. And I think that the true bull market will start once we do get to that target of 2%. Here we go. Always doomsday predictions on this channel. All right, bro, let's just put it into perspective. If you're not understanding that when the yields are rising and the bond market is collapsing and no one wants the lowest risk, they do not want to buy the lowest risk possible in terms of asset classes. If it is literally next to nothing and investors are not buying that, where is your brain, bro? What does that say about your thinking? I'll give you the optimism, ladies and gentlemen, but then you're going to come back and be like, oh, Tino's too bullish. Well, you can't win. But at least I know at this end of this live, you're going to come away from it knowing that the yields are still trading high. And you know that when yields are high, investors don't want low risk. If you don't want low risk, there's a problem. Well, you only want high risk? Doesn't make sense. Because the higher the yields, the worse it is for the tech market because they're subject to changes in the yields. No one talks about that in cryptocurrency. No one does. And if you're only looking at metrics in the blockchain, that's not going to work for you. Gone are those days. Those days are done, in my opinion. Yeah, we might see a whale buy like 2,000-3,000 Bitcoin. We're going to the moon. Go back in time and look at what the yields were doing when Bitcoin was rallying to the upside, okay? Now, one of the main factors that Bitcoin had to rally to the upside was the ETF. Minus that, go have a look at the bonds and the yields before Bitcoin claimed its all-time high, the first all-time high at 69,000-ish, okay? What was going on there? Go and have a look at what that was. The January 21st, year 2021, the January bull run. What was going on there? Low interest rates, yields were down, bonds were up, everyone was loving life, and money was cheap. Now you got a different market. I bet 90% of certain participants in cryptocurrency never consider the relationship of the yields. And if you're not looking at the yields, you're not truly in the game of understanding the industry. That's like coming to the poker table and demanding that you want to play poker, but you only can play up until the flop, which means that you don't know how to play the turn, you don't know how to play the river. You can only play, the first hand. Well, what cards have I got? Oh, I've got a pair of aces, all in, close my eyes and hope for the best. That's what you're doing, you know? And that's what you got to really take into consideration, ladies and gentlemen. Where does everyone expect the bull run to come from? Look, people want the bull run to come from someone on YouTube to turn around and say, we've got a bull run. And if you just go and understand the relationship between the yields and the bonds, why does it impact the tech market? Why is the tech stock so subject to the yields? Because they borrow money. And if the money's too expensive for them to borrow, that's going to then start coming out on their balance sheets. Microsoft is trying to lay off people. There's layoffs coming off because they need to realign their balance sheets because refinancing of corporate debt is still going to be high. Expectations to cut the interest rates. It's not happening. Not even in the next reading of June. And in July, there's about a 39-40% chance that they're going to look to see the interest rates staying at 4.25, 4.5%. But they still think it's going to be high. This is your problem. Everyone's asking, when are we going to get bull run? When's Bitcoin dominance going to start coming down? Bitcoin dominance. Do you understand what that is? The dominance is based on how many people are wanting to transact on Bitcoin. Yeah, we've seen a lot of transactions happening, but with regards to Bitcoin, you've got the ETF. And the ETF is acting as a hedge. It really is. They are buying the ETF and shorting Bitcoin. That's how they're playing it. Yeah, we've got Jerome Powell speaking today. I ain't pissed. I'm all right. You know? Any other questions? We're close up to 600% and you're saying we're not in a bull run. No. The bull run won't last long because your yields on the US debt doesn't make sense. Okay? It doesn't make sense. How can you pick up 48% on the euro? How can you pick up 101% on the yen? Do you understand what those are? There is clearly a disconnect right now in the marketplace because everyone is confused. They don't know where to put their money. You know? 10-year yields are high. Do you believe that we're going to a new all-time high? I believe that Bitcoin will get information and they will react to moving Bitcoin to the all-time high. You know, it will go to all-time high to get you to believe that there is nothing wrong with the rally and you're going to commit at the wrong time. You take all the amount of volume that has occurred at all-time highs on assets across the board, okay? Where is most of the volume? At all-time highs. Why? Because everyone buys at that point. And if everyone's buying at that point, that is a perfect time to reverse it. Just go and have a look for it yourself. Go and take every all-time high that has happened in Bitcoin and go and have a look at the relationship between the yields and the bonds. And then come back to me and say to me it was because the whales were buying on the blockchain. What reason does the whale have? If the whale's buying $50 million worth of Bitcoin, he obviously knows something. He's aligned with something. He doesn't just rely on blockchain. He ain't going to look at himself buying Bitcoin and say, I'm the reason it's going to go up. No. He's going to go elsewhere and say, well, what's risk saying? Are we in a risk-on environment? Stock ratio, stock bond ratio. Bonds are way undervalued in relation to the stocks. Before, it was the bonds were way overvalued in relation to stocks. Okay? Now, the previous one, or the previous showing was that stocks were way overvalued in relation to the bonds. But the problem is the bonds are still undervalued because the yields are staying high. And we've got to wait for that. Can you address the 1.2 trillion committed to the USA? Addressed it earlier on, my friend. Listen, the investment with Saudi Arabia is only going to be good for OpenAI, Nvidia, and of course, Tesla's in there just because of Elon Musk showing his face, okay? And of course, you've got the tech company that is going to be building it's in an infrastructure for a $10 billion data center, okay? So the way you play that, okay, that's going to be a longer term play, in my opinion, right? But the way you play that is I would pay close attention to business developments that are happening in Saudi Arabia alongside the US as well, okay? So just pay attention to news articles that come out about the company, like OpenAI, like Tesla, like Nvidia, all right? Because they might get a contract. Go onto the government's, go onto the US government's defense contracts, okay, as an example, right? If you're always on that page on the US government contracts, have a look at the contracts that they're actually giving out to companies. And if there is a company that's involved in transportation, then go and have a look at that company that's won that contract and have a look at where that company is. Is the earnings per share coming out in the next quarter? Then you can assume if they've won that contract, then the earnings per share is going to have an impact. That means investors are more than likely going to buy that stock because of winning that contract. And then you can ride that rally, okay? It's sad to be a perma bear. Oh, God. Anyone that challenges someone that says you're a perma bear, perma bull, the second you have bear or bull in your vocabulary, you're emotional. So I can appreciate why you say that. You're emotional about trading. And that's the sad truth. Because when it rises, you get excited. When it drops, you get concerned. You know? That's drink to the moon boy, ladies and gentlemen. The moon boy, he will always prevail, but the market's rationality can be way longer than what the moon boy's pocket will be. Shorts, listen, I'm not saying Bitcoin won't go up. What I'm saying to you, there's a disconnect in the market. It's not representing true bull fashion. You know? Look at gold. Is the expectation of interest rates being cut being shown? Possibly. But gold's been taking a bit of a tumble. They're hedging for the next event. I ain't mad, bro. Any other questions, ladies and gentlemen? What do you think of the difference? What do you think of the difference on the PPI expectation versus the reading? Well, given that the reading expected it to be higher means that there is a disconnect in the actual readings on the activity of what's going on with relation to tariffs and expectation of business activity. Consumer spending is naturally down anyway, okay? And the manufacturing data coming in showing a contraction shows you consumer spending is pulling away, right? Now, with the PPI coming in showing that goods and services or cost of goods and services are coming down, it's because companies are anticipating that the marketplace okay, is starting to contract. So what's the best way to encourage spending? To cut prices. Naturally, the impact of cutting prices is then going to be shown in the overall reading of inflation. If you've got a slowdown or a contraction in the manufacturing sector, it means companies are not producing as much as they would. Now, tomorrow we've got the consumer sentiment coming out. Now, if the consumer sentiment comes out and it does actually show that people are pessimistic about the economy, then, ladies and gentlemen, you're getting solid proof that the consumer, because the consumer is the one to blame, because he's the one that's going to go out and buy, all right? But when the consumer doesn't buy, he's to blame. When the consumer goes to buy, he's to blame. So if the consumer buys, manufacturers increase their costs so that the consumer can absorb that. If the consumer doesn't buy, manufacturers will cut their costs because the consumer's not doing his thing. That's why Trump's on social media all the time, trying to encourage people to buy and buy and buy and have faith. Yeah, we're going to go into a transition. That in the future, the golden age is going to happen for the US. Your dollar purchasing power is dead. And you can see that when they're not transacting on the bonds, the lowest risk possible with a fixed yield. You can lock in yield, but it keeps on going up. That means investors don't have a long-term expectation that things are going to be good. Now, would you want that information, or would you just want to go all in blindside and put your portfolio to the test at the all-time highs? And then you'll be there scratching your head thinking, what the hell just happened? No, Moon Boy, I'll stay there. Stay there, my bro. Stay there. Tino, where is your family in your family car? They're all sat at the bottom right here, my friend. Hi from Germany. Mad love to you, my bro. So I've got a question here. Tino, how is your skin glowing like that? Do you even have pores? Tell me your skincare routine. Ugh. Just, there is no routine. There is no routine. Mad love to my guy. Is that Victorious? Sorry, man. I didn't see what you've done there. Any other questions? When is Pal speaking? I think he's speaking today. At the close, towards the close, I think. I'll be quoted. I won't be quoted on that. I don't understand where the 48% etc. comes from on FX swaps, man. Listen, that's a different kind of asset class. Okay, it's a different type of asset. All right, it's not the idea of you going to your local bureau de change, right? For the guys in the UK that know, okay, and exchange dollars for euros. You're getting smacked on spreads from the provider, okay? When they say it's 0% commission, you are absorbing the cost, believe me, because your rate that you're being offered at is horrible. So whenever you go to a country and and you're paying by card, always pay in the currency that they offer it via chip and pin, okay? Never pay in your native currency because you're just going to get smacked on the spread, okay? Say more about the bonds market. What do you think? So what do you think are the long-term consequences of high yields on the 10-year of European countries? Fundamentally, the US bond market is as this. Interest rates on the US dollar are 4.5%. That means it's expensive to borrow dollars, okay? Go over to the euro, it's 2.4%. Japanese yen, it's less than 0.5%. Now, before I continue, some of you might be like, yeah, you keep on talking about the same thing. But when you go live twice a day and you're seeing the same thing happening every time, you have no reason you've got no choice but to talk about the same thing because money moves in two directions, up and down. So when we focus on the upwards movement, we pay attention. When it goes down, we focus on that. Now, given that the US dollar itself has got such a terrible purchasing power, on top of that, the cost of borrowing money is even higher, and it's the highest in the world right now. What does that tell you? It tells you that US bondholders will then say to themselves, well, where are we at with the bonds right now? Well, they're really low. Well, what's going on economically speaking? We've got tariffs, okay? Trump's already told Apple, don't be opening any factories or anything like that in India. Don't be doing that because we're going to make it difficult for you. He may have lifted out all the chips, all the tariffs on chips and what have you, okay? But he will gladly go to town on Apple and make sure that they do business in the UK and not in India, okay? He's now trying to reevaluate the situation with Japan, all right? And readjust the tariffs on there. There's a problem with that, big problem, because the Bank of Japan wants to hike the interest rates because their inflation is going up again. They don't want that. Now, back to the question with the bonds. The reason why it's important that the bond market starts to go up is because investors will then have an expectation that now's the time to start buying bonds because we know the future's looking good, okay? But if they're not buying bonds and the yields keep on going up, it's because they think that there's going to be a problem in the future. And for me to take on risk, I want a higher rate of return. So as long as the interest rates stay high, the yields will stay high. But the reason why Trump doesn't want that to be the case, because when you get refinancing on corporate debt, that means you're getting a refinance on $9 trillion. The US is a company. Think about it. They're going to have to get refinanced at that rate. That's going to be a problem for the marketplace. So if you've got investors, foreign investors as well, that are seeking higher rates of return to hold on to short-term dated securities like the 2-year, 5-year, 10, all right, maybe the 10 is a longer term, but for shorter term securities, that means that they are not looking for risk. They are seeking a higher rate. And if they're seeking a higher rate of return on the yields, that means they're not going to be putting their money into tech stocks because they know that tech stocks will be subject to higher rates of interest when it comes to refinancing of corporate debt. Okay? Go and have a look at how many layoffs are happening in the tech sector. Go and have a look at the relationship between when the interest rates are down and how few layoffs occur in the tech markets. Go and have a look at the relationship between the interest rates going up, the yields going up, and the amount of layoffs that happen in the tech markets. It's correlated because the higher rates of interest, the harder it is for these companies to sustain themselves on their debt. That's the problem you've got. Tino, there is a massive oh, okay, I've missed that. Any other questions, ladies and gentlemen? With that being said, I know I've kept you for 30 minutes or so. If you are new to this live stream, hit the update. Tino, when is the door giveaway? No? So you mean Bitcoin is a tech stock? Bitcoin's a commodity. It's not a tech stock. It behaves like a tech stock, but it's a commodity. You know? That's the truth. It's a commodity. Gold is pumping. What do you think of the M2 chart? Oh, money supply. Okay. Everyone keeps asking. This is what I mean. Everyone's focusing on that. Okay. Your M2 supply is going up, right? Okay. That is consistent and profit and good for Bitcoin. All right. Because it means that more money's coming into circulation, right? The problem we've got is the yields are high. So even if you were to get more money, it means you need more money to go and get assets because your dollar appreciation is zilch. You ideally want to see the M2 supply moving up and the dollar purchasing power being at least good. Now it's not. It's horrible. Can we trade gold on BTCC? Yes, you can. Just it's gold USDT. Yeah, just search gold. Go to tokenized stocks and to the far right on the tab of the website and you'll see it. Tino, are you on the run? Yeah, M2 is the entry level into the macros. Listen, you can focus on the M2 money supply. You can focus on the reverse repo program with the Federal Reserve. Okay, you can focus on those metrics. That's fine. All right. But the most simplest way to understand where you are in an economy and in a marketplace, first you want to focus on the largest market cap, bonds, 150 trillion nearly. Okay, so that helps. Then have a look at the rates of return that investors are getting for buying the US bonds. Then you look at that and say to yourself, bonds are really low right now and the yields are really high. They don't look like they're coming down. What does that mean? Well, if the yields are high, it means that the US government is advertising higher rates of return. And if it keeps on going higher, it means investors are not taking on US bonds. So what are they doing? They're going elsewhere. Where else could they go? Euro, yen, franc, gold. So a few days ago, we had safe havens. Yeah? Now it looks like everyone's trying to go back into them because they're now starting to understand that regardless of this trade deal that Trump's done with China, okay, It's still tariffs. All right. Yeah, you've done your Saudi Arabian deal. No problem. Cool. That's nice. The real impact of that, we're not going to see that for a little while. But the truth of the matter is this. Your Bitcoin's only going to go up, and the bull run is really going to go once we hit 2% inflation target on the Federal Reserve. And then once that happens, that's when your bond market will start to climb. Because by the time we get to 2%, the yields would have shot up. Your 30 years nearly at 5%, ladies and gentlemen. That is wonderful. They're going to get the 10-year to do the same thing. All right? They're going to get the 10-year to go to 5%. And when the 10-year goes to 5%, that, ladies and gentlemen, is when you buy bonds. You buy bonds at 5% yield. That's what you do. Based on my experience. With that being said, ladies and gentlemen, I hope that answers your questions. Stacey, I'm not interested in XRP anymore. What's your view on Bitcoin moves today? The problem that we've got with Bitcoin right now is it is very subject to stop runs. They keep dropping it to bring it back up. Bitcoin is being primed, okay, the windows are tinted. Bitcoin is being primed to move down, to move up, okay? So when you've got Bitcoin currently on the daily time frame, when you've got Bitcoin holding out above the 5 and 13 EMA, okay, you're still in a trend. But the problem that we've got is the faster Bitcoin moves up, the more likely it's going to try and pull back, okay? So just make sure you're taking profits. Keep watching the bonds. Keep watching the yields. You'll notice a disconnect. When the euro moves up, the NASDAQ moves down. Why? Because investors are going to the euro. Because it's cheaper to borrow euros and buy European stock. Why are you going to go and borrow dollars right now at 4.5%? When your interest rates are when your dollar purchasing power is dog. That means you have to borrow more dollars at higher rates and go and buy stock that's overvalued right now. Why do you think that there's so much, excuse me, why do you think Trump's pushing so much about investment? He knows that people need to get money into the market because the market right now has not got money in. There is a liquidity issue. Look at the spread between the 2-year and the 10-year yield. That doesn't make sense. When there is a spread between the 2-year and the 10-year, okay, and it's a wide spread, that's a problem. The spread needs to be tight. And if the spread is tight, it means that liquidity is all good. But if the spread's not tight, it tells you that investors are reluctant. So people are on the sidelines. And there's a lot of cash-rich hedge funds waiting for information to get into the stock market. But the alternative place that they're at, where is it? ETFs. They're all the way over at ETFs. Go and have a look at the ETF charts. Bond ETFs, okay? Go and have a look at what's going on over there. Sideways to a degree, you know? Tino, Melka's thumbnail says Bitcoin bull run on roids. What are we to do? Look, you clicked it. You went in. You want to understand the reason why, okay? I'm telling you that the bull run won't last. So even if we do get a bull run, happy days. But to encourage people to get invested in Bitcoin right now because there's someone that's going to sell their nan and their dog and go into Bitcoin at the fear of missing out, that is going to break the all-time high and go to 300,000. There is no one that puts out a price projection on Bitcoin that doesn't look sexy. No one's going to say Bitcoin from the current price point, let's say 103,000. No one's going to be like, Bitcoin is getting primed to go to 106. No one wants to earn on a $3,000 move on Bitcoin. They want to earn on a move from 103 all the way to 250,000. That's the culture we're in. But when you start looking at the bigger picture of things, then you can step back and be, you know, I'm a little bit excited about Bitcoin making a move to the upside. I'll chuck in a couple of grand and try and see if I can earn off a $3-4 move on Bitcoin. And then when you earn off that, take some profit and then wait to see what it does at the all-time high. See, the problem with everyone in cryptocurrency is this. Bitcoin moves up 35 cents and the bull run's fucking back on. 35 cents. We got a bull run. We got a parabolic candle. We've got this. It just doesn't make sense to me. It doesn't. You know what? When I started this channel, I was primarily focused on for cryptocurrency, okay? And I was just diving into Bitcoin, Ethereum, okay? And then one day when I was trading on dollar yen, I was making bank on dollar yen, and then I was going to all the members of the channel and I was saying to them, hey, look, I made this amount on dollar yen today. And then looking at cryptocurrency, it took a shit. I'm like, that's a little bit dodge. I'm coming out trading Forex and everyone's in crypto right now. They've lost money. I've made money because I trade Forex. So that's when I started to say, hold on a second, let's incorporate Forex into this right now. Now I know every single one of you, in my opinion, can leave my lives, okay? And if I never do a live again, and this is the last live that you watch, okay? I know that every video on my channel is filled with an understanding of the relationship between the bonds, the yields, the carry trades. Why is it that Aussie yen moves up alongside the NASDAQ? What on earth has Aussie yen got to do with the NASDAQ? It doesn't. But it's a carry trade, which means it borrows, when investors borrow yen and dollars, okay? They take those, they convert them into Aussie, then they use that Aussie dollar to then go and buy stock. NASDAQ goes up, Aussie yen goes up. No one in cryptocurrency would have the faintest idea about that. No one. None of you. This ain't for clout. It's for you to recognize that there's a reason why money moves. And when you understand the paths that it can take, and then you start to collate all the information and say, okay, the bonds are moving up, the NASDAQ's moving up, Aussie yen's moving up, carry trade, okay, fine. Euro's going down, the NASDAQ's going up, so they're selling European stock to get it into dollars, to then put those dollars to work into the stock market. Happy days. I've got myself a bias. People look at bias structurally on the chart. But if you have no reason as to why the structure itself occurs, and you can't justify it, you've got no bias. That's why this market is hard. Because you get good news, Trump says something great, the stock market drops. Ladies and gentlemen, inflation was 2.3% in the last reading. That's brilliant. So what did the market do? It dropped. Now, we could be safe in the knowledge and say that they dropped it to buy and then they marked it back up again. But when you look at that from a macro perspective, you say it doesn't make sense. How is it inflation's down and the stock market's down? What's going on? How does that make sense? So that's that. I'll drink to that. No, I am not angry. Jesus, man. I am not angry. Not at all. Not at all. I'm not angry. Listen, there's been a Bitcoin shortage for such a long time. We've had supply issues for such a long time, and Bitcoin goes down. Explain it. Explain that. If there's a Bitcoin shortage, Bitcoin's price goes down. You know? I'm Greek. So of course I speak with passion. Other than that, ladies and gentlemen, is there anything else that I can help you with? No, I've just finished my travels. Tina, yeah, I'm a taxi driver. He deleted the comment. I'm always making a pass and flirting with Tina. When I'm back, ladies and gentlemen. I'm back. Don't worry, I'm back. I just got to get myself sorted out. What happens to everyone's money when all the computers die? Well, it's, EMP pretty much shuts up the market, you know? Hold on. Yeah, I was wondering why almost no one mentioned the 2.3 inflation and market dumping. God, man, we covered that from day. We covered that. Since the ETF, the idea is to accumulate Bitcoin and bury it. Okay. Yeah, there's that as well. Sovlagi or Giro? Tino, why did gold this move with PPI datas? Is gold up right now? Can you just tell me, chat, because I have got no access to charts. Is gold up right now? Has it made a move to the upside? Is gold up? Can you just say, yeah, it's up, yeah? Gold is pumping. Okay, so in cryptocurrency, Those of you in cryptocurrency, anybody new? Is anybody new to this channel right now? Okay. Here is an understanding of why gold's moved up. PPI is what? The cost of goods and services. That means companies are going to be charging the consumer more or less to get their business. Okay. Now, if the PPI comes down, that's good news because it means companies are charging less for those goods. That means what? There's a chance that inflation is going to come down. That means what? That means the Federal Reserve is more than likely going to cut rates because they said, wait and see, they need more information. Now they've got more information to justify the rate cuts. Gold goes up. And on top of gold going up, uncertain investors will see that gold's going up, will then try and step in and pick up gold on the cheap because the narrative still says that they're concerned about what's going on. Okay? So that's what the PPI shows you. It shows you that there is a possibility that the Fed will likely cut the rates. Okay? Manufacturing data down, gonna cut the rates. Okay? But I've said it, and have you heard it here? The market will not move until 2% inflation is realized. And if the Fed does move the goalpost for inflation target, your yields will shoot up. They will shoot up, and then your bonds will drop aggressively, bond crash. And then when your 10-year is above 5%, that's when everyone goes in and buys bonds. That, in my opinion, will be the start of a bull run. That's my opinion. Okay? Now, there's 1,400 of you in this live stream. 457 of you have only liked the stream, so mad love and respect. Can normies exploit the 102% on the yen, or more so the knowledge what it represents? Fundamentally, yes and no, but you've got to understand, for you to benefit that bit of arbitrage in principle on the fact that the dollar is down and the euro is up, it's a different kind of asset because it's an implied rate swap and there's certain fees that are charged onto that. Okay, it's a different type of asset class. All right, so it's not fundamentally what me and you would go and do and exchange euros to dollars. Okay, because we don't get access to that. We get access to that information, but we don't get access to that type of asset class because it's for the big boys when they're moving hundreds of millions of dollars and they're looking to just lock in a certain rate. Okay, so Tina, when the 10-year bonds get to 5%, we can all strap on to drive force our Johnsons into retail FOMO coming in. Well, yeah. Tina, what is your favorite airline, if any? Oh, my favorite airline. Oh, it's just a comfortable seat, man. That's what I'm interested in. I'm back today, guys. Someone is getting slammed. Oh, my days. Now your comments are coming out. Right. One more question. One more question, and I'm going to love you, leave you all. Do you expect a downside move starting today with economic data that just came out or gradually starting? Well, you've got to understand, ladies and gentlemen. Someone give me the price of NASDAQ right now. Give me the price of NASDAQ. This is what you've got work to do right now. Give me the price of NASDAQ. Give me the price of Bitcoin. Give me the price of the 10-year yield. So NASDAQ, 21,300. Okay, done. Thank you, Arbitrage. 21,300 NASDAQ. Bitcoin price. Tina, why does my wife's boyfriend love you? No, your wife needs to love me, not your wife's boyfriend. 102,560 on Bitcoin, and the 10-year yield is 4.4%. Okay, 101. Where are you getting that reading? Okay, then cool. So since I started the live, Bitcoin hasn't really done too much, but I know Bitcoin has corrected down. It's dropped down, and it's come back into the midpoint of the vector candle that I marked off last night for the platinum members. Okay, so if it can hold that range, it's obviously gone towards the lows of yesterday's New York session, right? So if Bitcoin can sustain this range, all you need to do is just look at the relationship between the offers and the bids. If there is a high concentration of offers, maybe when Powell speaks today, okay, he is going to reiterate that we need more data. So don't get too excited. I know he's actually speaking, by the way. No, I won't speed. VIX at 18. There you go. There's complacency. He already spoke. That's what I mean. Yeah. Is it flowing from Bitcoin to ETH ETFs? Yes, it is. That's what Cyprus is. What's a good platform to see the bids? Oh, there's a number of platforms. You've got CoinAnk, you've got loads of platforms. Tina, what's your favorite flavor? 101 in the midpoint of the vector candle daily. That's correct. Thank for the macro heads up. Listen, take what you can from it, guys. Trump's got some sort of plan moving forward. He always has a plan moving forward. There's always a plan from Trump, man. So it's just... Look, I can't deny that these markets have been hard to trade. They have. It's been hard because you're having to rely on when Trump decides to burp. Well, listen, Alibaba's just missed out on their estimates, so we know that consumer spending in China is a problem, okay? And when Alibaba misses out on their estimates and Chinese people are not spending money, we know that China's going to want to stimulate their economy, and they've been trying to stimulate their economy and no one is biting, and then Trump's sticking them tariffs. Telling you now, the black swan will be China's economy completely collapsing, because even though Trump is putting tariffs onto China, where's its product going to come from? China would then only be in a position to reverse everything and put even higher tariffs just to keep the US intact. You know, 2 minutes till market open. What time is it? I'm going to stay with you till the market opens because it's a bit of an awkward live today. Not an awkward one, but it's just timing. US market manipulation. Trump is a belt. Yeah, okay. Can't really say that. Here we go. Wasn't it obvious? Here we go. We spoke about this. Was it obvious in hindsight, or was Druckenmiller and Tudor Jones bond shorts a generational play? They knew exactly what was going on. Druckenmiller has been short on the US bonds for a very long time. And he smacked it. We even addressed it in the lives. Yeah? Druckenmiller was short on the bonds. He's laughing right now. He knows that the yields are going to keep going up. And that when he offloads that position, because he can set, he can file his 13F documents, filing 13F filings, and you'll see them getting rid of those exposures. You know? You got a big nose. That's good. We'll drink to the big nose. Ladies and gentlemen, have yourself a wonderful day, and I'll catch up with you soon.